There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Welcome everyone to the I Can Barely Speak Saturday live Market Watch channel broadcast from yours truly. My name is Steve Vetterl. I have an exceptionally scratchy throat, so we'll see how far I can make it today. In any case, today is the 30th of April, coming into the last day and moving into a new month starting tomorrow. So here's the calendar. Let's take a quick look there. So tomorrow being Sunday, the 1st of May, we get 2 months left in the quarter. And let's move on. Let's take a look at, actually, let's look at the Forex Factory calendar. So we have a time change if you're watching the recording of this to 10 a.m. Eastern time. My apologies on the Telegram channel. There's some conflicting posts hitting it, but we went out and the picture of myself is the correct time and post. There's a couple of Autobot posts we have set up that need to be adjusted because it just hit my channel, I noticed. So just keep that in mind. Spread the word that it is 10 a.m. Eastern time. I try and get these started a little bit after the hour, 5, 6 after the hour. And we do it every Saturday, and Tuesday will still be at 1 p.m. Eastern time in the U.S. So welcome everyone after that long explanation. Let's take a look at what was a week of hell if you're an equity holder, from a calendar standpoint at least. Sunday, 1st of May, it's bank holiday in China. No surprise. I'll tell you, the surprise was the fact that the government's going to backstop a lot of companies. That was a surprise. If you didn't hear, that rallied a bunch of equities in the Asian area. So, holiday on Monday as far as the UK. It's May Day, which we always found funny. That's a sound that you're going down in a plane. But in any case, it's a holiday. Do be aware of that. There'll be probably, since there is a ton of currencies traded in the country, I would imagine volumes will be significantly lower. As always, I could be wrong. But holiday in Japan, I think it's the same thing, right? Yeah, so it's Labor Day. And I forget what's the holiday again? Constitution Day, okay? So you have May Day, Labor Day, and Constitution Day coming up on Monday. See, look at that. We just gave you a history lesson on, if you're not a resident of any of those countries, you learned a few things. So do note RBA rate statement. This could certainly cause issues with either New Zealand dollar or the Aussie currency and its associated pairs. Got employment here coming up, more bank holidays again on, it looks like it's a whole week of holidays. No, half week of holidays in Japan. They're probably looking forward to that because their currency's just been getting absolutely murdered. All right, let's monetary policy statement early on Thursday. Do note that. obviously the big one of the week, although I don't really know. This carries quite the weight that it used to, and the what's called non-farm is basically the unemployment rate. You can always click on any of these folders if you guys want more information on it. Front and center as far as any news story outside of geopolitical unrest involves just exclusively inflation. So if you haven't been listening to my casts, I highly recommend. 2 Saturdays ago, if I'm getting that right, I went into exhaustive detail, probably more than I should have, because most people said they listened to it, they learned a lot, but their head was spinning. So was mine at the end of that broadcast as well. So that is it for the factory. Do keep in mind that, as I have done myself, always pay attention to the date range. I keep saying this over and over again, and yet it's actually helping me solidify that, because literally last week I was actually doing some trades myself. First time in quite a while I've been doing a bunch of trading, because the S&P futures markets have just been absolutely bananas. So I mean, there's money to be made, and them their hills have gold. I was in trying to mine some. I had a pretty successful day. So let's take a look at the chart. I'm not going to spend a lot on equities. Everybody knows how ugly it is. These dead cat bounces I've been talking around for months. Most of the pundits on television are like, hey, the market's on sale. It's time to start loading up. Well, if we break this 4100 level, which is quite easy to see on this daily chart here of the S&P, it's going to get pretty ugly. You can see how much support is at this line. Look all the way back to last April and May. Support at the line, dipped slightly below it, right? This is a great example of a head fake, okay? Because we gapped up. This is not the easiest to see. I can make the screen bigger, but just as a point of reference, we dipped below it, and this is where, and I could tell you max pain wasn't here. Max pain was up here for the shorts, but once we established the bounce here and the bounce here, this became, just a face ripper for the shorts, and obviously something you want to stay long on. But this line here is pretty damn important. So I would imagine there could be some head fakes underneath this area. Wouldn't surprise for those trading anything that is S&P or NASDAQ based. Going to be critical to see in the ensuing days how solid this 4100 level is. I personally have a feeling, again, I could be wrong, it's just a feeling. Don't really have a lot to base on, but if we were to take a look at the market profile chart, I would imagine we would see just some serious what's called naked POC lines right around this area. And all that really is just solidifying potential strength in this area. Notice volumes have been slightly increasing on this sell-off and flattening out, but a little higher, obviously, on Friday, which was a big down day of almost 3.5%, which eradicated most of the previous few days' moves back up, right? Not positive, let's just say that. Ending at the lows of the day right at a really big point. And then a potential for just some raging ugliness Monday. So there's a lot of leverage out in the marketplace. So this is a lot of these types of trading environments, what I like to call the widow maker. And I usually do not step into the fun zone, which certainly will more likely be Sunday night when futures open into Monday morning. I rarely step into this kind of fun zone and trade. I want to see what plays out, right? We close below this area. It's going to be max pain for the leverage longs. Max pain means that the market typically will do something that is completely opposite of what the main theme of the movement is. Why? Because it's always looking for max pain. It's essentially looking to completely blow up where most of the participants in a market think things are going, right? And I'm betting that there are a lot of shorts here just waiting to jump on this break under this line, right? I prefer to wait for confirmation that they're not head faking under this. So sometimes I'll let this play out for a couple of days if I was a trader in any type of equity based or futures on this type of market. But you're always looking for the canary in the coal mine. So you can go over to all on finviz.com and then go down and take a look at where we are in terms of the precipice here in other markets. See that we're not quite in the same position with European stocks, which I find interesting, right? We are on the precipice, and we broke below the precipice on the Russell 2000, which is small cap stuff. So anyway, interesting point, right? Are you taking any hints off of the other markets leading the way in direction? I don't care if whatever markets you trade, you're always looking to see what's going on in other markets for a potential break lower. But the wisest risk management in terms of lowering risk and managing it well would be to sit on the sidelines, which isn't always seen quite as fun when the party on the dance floor is bananas, right? But you have significantly less chance for injury. Not going to really get into too much on the metals, although just surprising that all these pundits are pushing for metals to go higher, and look what they've done. It's crazy. Nowhere near the highs. Something like platinum and palladium and copper, I don't know if you guys ever heard the term Dr. Copper. What it typically tells you, not necessarily on a day chart, but what it'll more than likely show you on a weekly chart is that this goes the strength of the economy is based on the price of copper, right? You see it's lifted up a ton from a very, very long period that it was basing in this under 3 area, and then it just rocketed up through the pandemic. This is the demand that the market saw for the chip shortage, right? You can see that very clearly in the price of copper. But interestingly enough, it's not near its highs, and it's spent a lot of time in this, especially as factories are catching up to chip shortage. You know that 4 is the line in the sand on this if we're going to be watching this chart, right? Always looking for hints in other markets as to what's going on in the broad economy. Sometimes these guys offer that canary in the coal mine thing I talk a lot about. Sometimes they don't. All right. So most of what I've been talking about is just the US dollar's increase and the decrease in almost everything else. No surprise, it has continued. A lot of times when you have moves like this, which I've shown a lot on the weekly chart, you get a move that is magnetized, if you will, to a particular area. And look at that, just a straight rip up to the highs, which at this 104 level, you can see over a long period of time so far have been defended successfully, right? So it's like they're trying to get in the Alamo with the Battle of the Alamo, right? And they couldn't. Doesn't mean they won't go for it again, but typically moves into a big area like this, especially if there's a shot right up into the area, it is one of the very few times that I will step in front of the train. Very few. Ultra rare. Why? Because it's overbought. And this type of chart can apply to anything, any currency, any type of commodity, equity, credit, what you name it. The price of art, right? Anything in this type of chart, you can always take a quick shot at the highs, right? You don't want them to blast through, but more than likely, big century marks like this on a long-term chart are almost always defended with the initial shot against it. The subsequent breakthrough, potentially into a higher area, is I think in this particular case, not as big of a feat as you would think. I think a lot were surprised that we didn't spend more time right here. We just shot right into it. And a lot of this just has to do with the current environment, right? Many you'll hear say, well, the flight to safety. I view it more as a lesser of all the evil currencies out there, right? We're, in terms of U.S. residents and the U.S. dollar, we are viewed as the safest alternative. Not quite sure in the grand scheme of things how safe we actually are with all the freaking ridiculous amount of debt we have, but everybody knows my stance on that. The world seems to think we're the best of all evils for now. So what happens? I think we probably just build a base up in this area. So use that as more than likely sideways trade going on and almost everything else matched with this. So new lows in euro, no surprise. Again, continuing to get pounded. We're still looking at weekly charts here. No, sorry, daily. Let's take a look at weekly actually. See these two charts right here, as I talked about a bunch, they're troubling. Just continuing to sell off. Wouldn't it be just absolutely bananas? I know I say this a lot. My kids are always like, Dad, seriously. I was thinking about getting a license plate for my car. It says bananas. But in any case, the wouldn't it be crazy if the euro and the US dollar went to parity? So it's 1-for-1. Not cool? I think the European delivery of European cars becomes a little better. You know, you go over to Europe, get your car, drive around the Autobahn in Germany for a while, stay for a couple days, and then they ship your car back. It's actually pretty cool. I had a let's see. Parity. Crazy. Who would have thought? I bet we see it. When it'll happen, though, it's going to require a significant move up in the dollar. Drill down into some charts. So I have to get questions about this. This is called TradingView. I do not get compensated by these guys, but I'll tell you, this platform and this charting system is fast moving into Bloomberg caliber, right? We'll never have the coverage from the analysis standpoint of the deep bond analysis that Bloomberg does, but for essentially 15 to 20 bucks a month versus 2 G's a month for a Bloomberg terminal and keyboard, I consider it pretty damn good. So let's take a look at I want to start with let's look at an expanded view of the dollar. Really going to have to spend most of our time on weekly, monthly charts here because we're up in nosebleed section, and you can see how fine. Just make this bigger. So you can see where, you know, there was a bunch of stops up here, and not necessarily as much here, but in all of the other currency pairs that represent, there was just a pocket of stops up there, and they just went and blew them all out. This is that thing I always talk about. It's called clearing the queue, right? So the really, really big moves outside of the Bollinger Band and the trade short came somewhere around here. You would have had to what's called front run this trade, meaning that you're not waiting for it to perfectly hit 104 or whatever that goal is of this shot. You wanted to front run the trade, so you would have had to take a little bit of heat, but it paid dearly in the reversal off of this. And you could use the exact same analysis, but just flip it upside down for trading the euro, right? So moon shot into this 1.0440 ish area, right? I'm betting that we'll spend some time balancing between this area. So this whole area that I'm going back and forth on is pretty much our zone We may go back and test the lows again. It's probably another buy. Can't be for sure on that. It's just an off-the-cuff thought as far as my napkin analysis here. Probably would be a good long. Got to be quick on stuff like this. I'd much rather short the slingshot that more than likely is going to play out on this. So I would say somewhere in this area, more than likely you probably get the front run this trade, but somewhere in this area, if it looks like it's starting to get ugly, or if you guys see any, any of the bounce arrow go signals show up somewhere in this area, you can take that kind of trade. 1.0755. We may never even get to this point, but as soon as it looks like it's going to start to roll over and go back down again, probably have a fairly safe short. But I do expect us to spend a significant amount of time, could be a whole month, in this area, absorbing, if you will, the movements that have taken place, which have probably surprised many non-chartists that are on television squawking about whatever fundamental analysis they seem to be toting, whereas charts don't lie, people do. So that was always our mantra. Pay attention to what's going on with how people are actually spending their money on these trades, and it gives you significantly deeper information, especially if you volume overlay it, as you'll see on the left-hand side down here. I mean, in terms of volume, the only problem with this system versus my Linsoft IRT platform, I can determine how the aggregate of this volume plays out, whereas I'm pretty sure I'm only getting the volume from September 19 to now. But regardless of that, I probably have to switch to a monthly chart on this one. Yeah, see, so we're down here, at least from a volume perspective, we're in no man's land. This is probably easier to see like this. Yeah, there's just been no volume down here. It doesn't mean you can't trade there, but a lot of times these air pockets, they're typically defended by larger institutions, because trust me, there's a whole bunch of institutions out there of any form that are probably big time long the euro. At least they're loading up down here, hoping for some sort of big reversal, right? But you can't know that that's going to play out until you've spent some time balancing in this area, right? Building a base. Keep in mind, we're looking at multi-years on this chart, so this isn't the best illustrated on something this long term, but I always want to at least know where the volume is in the aggregate. Doesn't necessarily mean also the players that were along this are still holding that position, right? It's an aged position at this point, but it'd be interesting to know. We've just, from a monthly perspective, I mean, look how big this candle is. We just moonshotted down into this area, right? So if we opened up down here lower, let's say even lower than this candle wick on the bottom here, just right under this spot 045-ish area, and start a one-time framing down, that's really negative. But it also potentially, I'd be looking for what's called an island reversal in this area. I know I'm sort of jumping all around, but I always found the best education for my students in the past was just showing them a ton of live real-time chart patterns from all different views. So we're really, this is like looking at the whole planet Earth right here, right? Whereas we start to drill down into the daily charts, you get a little bit of a deeper read of what can happen. But we're down in no man's land, and we could ride this Bollinger Band down for a period of time. We could also spend a fair amount of time balancing this area, which would be my bet. So you can play both sides of this, depending on the signals that are coming off of whatever EA or whatever manual trading method you guys are using. Spend a lot of time on the euro, but again, the same thing applies. I'm much more interested in the slingshot. This is far away, obviously, but doesn't mean we can't get back to this area. Slingshot's really nothing more than you get stretched and then it bounces back up like a dead cat bounce, like I've talked a lot about, that's taken place in the S&P. We're bouncing back up into an area, but you've established downtrend, sharp downtrend. So the sharp uptrends, these are very low risk trades, just getting back on short as it slingshots back up into there. Many of these trades, if they're executed well, have win rates well above 80%. Doesn't mean they will going forward. I'm just telling you, of a large data sampling of this trade style has a very high win rate, which again is most importantly a high reward to low risk. Got to go all the way out to weekly to see where we are. And we bounced right off of our support line, which is pretty solid stuff in the software. That'd have been a good trade. Way outside the Bollinger Bands. It's this sort of teal colored thin band you see here. This is a custom written formula that's used to plot this on the chart. It's been very good. Hats off, by the way, to Desan, Mr. Variable, for some of these indicators that he's written that I have overlaid on this chart. He is the man. I should go out and see Desan. We both live in Orlando. We need to go out and have some cocktails, take some pictures, and post it all over the Telegram, right? All right, what else? Get too much into the other currencies right now because I'm beginning to lose my voice. See if there's anything else. No surprise here, huh? We've played a little bit of cooling out. Actually, you know what? Let me take a look at the GBP CAD. Oops. So we broke the area right here. Notice we came lower. See how this slingshot worked? Downtrend. Obviously weakness in pound for a whole host of reasons. I don't think is really any surprise. See another Bollinger Band touch that was an extreme out. One of those few times I will step in front of the train here. See that? Very stretched. Most of the time I prefer just some sort of pattern to get you back on the current trend, up or down. Let's take a look at the coinage. Weekly charts, long term. Just understand when the bathwater gets thrown out, the high risk stuff typically falls with it. Still looking like this thing wants to trade down to our big support area, the whole 29-ish bottom. Be interesting to see where we hold there. I would have expected this price to have made some, and maybe I should take a look at the daily chart to show you guys a little more. This is a lot more noisy of a chart though. But you can see every time we sell off, we have much more elevated volumes, in some cases double the average, right? Like the 26th of April showed. But there's, again, a lot of support in this area. Still a group of whoever out supporting price at this 38. But I would imagine if we spend a significant amount of time underneath this area, right at this 37.8-ish area, you'll probably see 30. Could shot right into it. You'll probably see some defending. See how these volumes were bigger on these reversals? These tells you somebody's out there defending this position, which essentially just they're in buying and supporting price down here. These are tells right here. At some point, significant tells with volume, right? We crack under this area, probably going to go 30 real quick, maybe lower. The temptation among many inexperienced traders is to try and catch a falling knife, and because the patience that's required, you're best off just letting the pattern play out and it potentially break higher from some sort of sideways basing pattern. Those are the most successful historically in almost any area you can trade if you wait for my favorite, which is called a cup with handle on rising volume, is a great long trade on something that's had a significant pullback, right? So for those wanting to buy Amazon, which by the way, I got to tell you, that came as a surprise to me. I mean, they absolutely got clobbered. Just goes to show you now that everybody's sort of post-pandemic. Let's take a look at Amazon. Stock's actually moving into a value position. I want to see 5-year. Here, so you can see we were a fair amount of support here at the 2800 area. It just absolutely crashed through that. This previous zone from arguably the 1670 area all the way to about 2000, where I may be looking to take a look to add to it. I'd want to see it spend some time in this area. But a considered deceleration in earnings is just going to drag this stock and most of the entire Nasdaq back down to this area. I think a lot were caught flat-footed on this earnings, and that's that typical complacency crap that is a huge risk management item if you're not paying attention to what's going on, right? If you're out performing some heavy drinking when you're in the yard and you're not smelling the roses, which many in Wall Street with this ridiculous leverage that's placed on some of these funds, essentially the margin guys in New York are they're pulling all the flowers out of your yard while you're passed out on Shay's Lounge, right? So always be wise as to what's going on, but this is an interesting story developing. You could put most of these in that category. And NVIDIA is another one that we're watching closely for a potential entry. We'd much rather buy this down at the bottom of a significantly well-organized and played out base. This is a cup with handle right here. Once it broke, this is your entry point. It's one of the lowest risk entry points you can have in anything. Now, we're obviously looking at a weekly chart, so you can drill down into see lower what the break point is, but you see how when this broke out, it was on increasing volume. It's exactly what's textbook chart lift, right? This wasn't. Everybody's like, oh, look, it broke here. No, not really. This was the mania. These are typically what's called the mania or a shooting star phase of especially if you look at this on a monthly perspective. See, this is actually a shooting star candle. Just shot out, just completely exhausted itself, blew way past the Bollinger Bands. This is the time to get short. You've made almost 50% on your money if you're short and you were holding. So there's good and bad, and you can play both ways of any market. Just be smart about it. Let's take a look at what else I want to look at. I haven't looked at oil, have we? There's gold on the long-term chart. Let's focus on weekly, though. Still got that zone it wants to. Every time it peaks its head above that zone, there are sellers. Now oil shooting back up. I actually want to see this on the daily. Support and resistance lines don't lie, do they? Very solid and bankable stuff. Right. 10 a.m. on Saturday, 1 p.m. Eastern time on Tuesday. My name is Steve Vettel. Today is the 30th of April. Happy May 1st tomorrow, which is Sunday. Do note we have significant risk in the marketplace, and I highly suggest you take a close look at what's going on before you do any trading. May the trades be with you.
There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.